Good afternoon. Welcome to the LibertyStrikesBack.com podcast. I'm your host, Joe McHugh, your independent candidate for President of the United States. Today I'm joined by Dan Mariano. He is the CFO of a credit union here in Metro Detroit. And we're going to talk about how to end the Fed and go green instead by converting the Federal Reserve Bank into a credit union. So, Dan, you want to tell us a little bit about yourself?
So I've been a CFO of a credit union for about 6 years. I've been in the credit union industry 18 years now.
Wow.
And so and when I first started working at a credit union as a teller, I didn't even know what the difference was between it. I grew up with an account at a bank that has merged into like 7 different banks in that meantime. So I had no idea what the difference was, and I never really even heard of a credit union. So after working there and seeing specifically how it's a member versus a customer, the viewpoints, and seeing how everything is geared differently, I never wanted to join a bank again. So just kind of going through the basics to start off with the difference between a credit union and a bank. First off, credit unions, they are for their membership. So each individual account holder is classified as a member. Now what a member does is it allows them, they essentially have a vote. Any member can come to an annual meeting. They can discuss their viewpoints. And also to take it even a step further, the credit union is geared towards the members versus a bank is geared towards an investor or shareholder. So decisions at a credit union in terms of fees, rates, and everything they're all more geared towards the member versus the shareholder. So you may hear some commercials and such like better fees or lower fees, better rates, join a credit union. Those are true. Not only that, but they also have better member service. For instance, if you are a customer of a big bank and you try to call in to customer service, a lot of times it's kind of like calling Comcast or whatnot. You have to spend a good 45 minutes, whereas you can call your credit union and get right in, get your answers taken right away, and then just taking a step further with this pandemic, I wanted to, would just like to add too, with everything that's happened, for instance, my institution, we starting, in March, we started, any member that called in and said that they were struggling, we gave them skip payments. Basically, they could skip a payment on their loan. We also did loan extensions, and we really didn't segregate anyone out. So we were really there to help everyone. We waived fees across the board to really help out the individual consumer. So
that's really interesting.
Yeah. So you kind of see, the true colors at that point. So it really opened my eyes as to how you're treated as an individual there. So.
Does your credit union actually own or hold the mortgage loans? Is that part of the reason why you're able to work with them?
Well, it's not even just mortgage loans. It's individual consumer loans. If they have a personal loan or a car loan, we were more than willing to help them, through this uneasy time because everyone didn't know where their next paycheck was going to come. There are a lot of people like that. So what we could do to help them in this situation, we had a lot of stories of individual members that were just so grateful about it. So,
wow, that's fantastic.
Yeah, so.
That's great. Thank you for sharing.
Yep, no problem.
Okay, so now this is a question that I've been asking a number of people that have come on the show. How would you like to have an extra $4,000 per year without having to work for it and without it coming out of tax revenue?
Who wouldn't?
Right.
Who wouldn't? Yeah. So just how how would you be able to get that, and what is the how's it paid for? So
I think we're gonna get to that in the conversation. The short answer and the most direct answer is that would be the member dividend for a national credit union of the United States or a federal credit union of the United States. Obviously, in order to produce, that works out to 330 million Americans times $4,000 is $1 trillion. And I believe that the Federal Reserve is making probably at least $1 trillion a year in profit. What do you think about that?
Based on their size of their balance sheet, I would not be surprised. One of the hardships you have with the Federal Reserve is no one really knows what's their size, and then how do they get their money? Like they print money out of thin air, and I've always been growing up saying money doesn't grow on trees, but they're trying to prove that they're trying to show that isn't actually the case. So, so I mean, there needs to be more transparency with them. I used to, just as take a step further, during my career, I also, after I graduated college, I worked for a CPA firm. I audited credit unions, so I am a big component of full transparency, and you do not get that with the Federal Reserve. So
this is gold, folks. Coming from someone, this is absolute gold. There's no way I can add to that. I agree wholeheartedly. And so let me ask you then, just off the top of my, since you're talking about transparency, and the central component to the platform, the Liberty Strikes Back platform, is a credit union that is clean, green, citizen-owned, and fully transparent. What would that do, in your opinion, just from, and we haven't gotten into the specifics yet, but...
first off, I think that would boost anyone's confidence with the overall government, because anyone could go in and look at their annual report, for instance, and so you can see how well, how they're doing financially, without not being able to know all those types of information. So having the knowledge, and everyone talks about how much we're in debt to the Federal Reserve. I just just looking at the stats, the Federal Reserve, the deficit's over $27 trillion. You take that and divide it by the average taxpayer, that's $216,000 over that amount.
The debt is, right?
The debt per taxpayer. That's a house. Every person could have a house with the deficit that we have with the Federal Reserve. The debt. Sorry, that we have with the Federal Reserve to keep continue to print money and such. So I mean So when you talk about $4,000, I mean that when you take that into account with what the current debt is, I mean seems doable. So
right, and now considering that the $216,000 of debt that each taxpayer owes to the Federal Reserve, not entirely, because out of the 27 trillion, 1 trillion we know we owe to China, and they're the largest outside holder of our debt. So beyond that, after that is Japan, and they're just under $1 trillion. So there are a handful of nations that we owe money to, but generally that totals only about $3 trillion. So the real question is, if the largest external debt that we owe is about $3 trillion, then who do we owe the other $24 trillion to? Right? That's the real question here. And because we don't have the transparency with the Federal Reserve, it's tough to answer that question.
Yeah.
Okay, so very interesting. All right, so so a credit union that's fully transparent. So you're saying that as an auditor and as a CFO of a credit union, your books are open to whom?
To anyone. Anyone wants to see them. We have an annual audit every year, and those reports are available to anyone that wants to request them.
Okay. And is the credit union profitable?
Yes. Yep. Even in these, right now it is challenging times with how low interest rates have become. It makes it more difficult because every institution works on a interest margin, basically the income you earn on loans versus the income you pay out in dividends. That's your margin, and as the income on your loans decreases, you can only decrease your dividends so much. So it's much more. It's a challenging time in a very low interest rate environment we're in right now. But for borrowers, you can right now we have a huge refinance boom. I mean, there's opportunities from that aspect. But the savers, they have the difficulty because the interest rates in the current financial institutions are very, very low. So they're not happy with that overall with this environment.
So just to kind of recap what you're saying is that the credit union, and not just yours but other credit unions, and perhaps the banking and credit union space in general, would you say, is having is kind of having more challenging times earning a profit because your interest and your profit is derived from the difference in the interest that you bring in versus the interest that you pay out on deposits. Is that right?
Mm-hmm. Okay. Yeah, that's a huge source of income. Yes.
Okay. And then as a credit union or as a bank, now would you say that they're substantially similar, credit unions and banks? Like, the biggest difference is who owns it.
That's part of it, but you'll typically see if you rate shop, if you went online and looked at rates of various credit unions and various, like if you want to buy a car, for instance, and if you did some rate shopping comparing rates on the banks in the area and the credit unions, typically the credit unions have a lower interest rate, which in turn for the average consumer,
for
more
borrowing.
money for borrowing. Yes, and then you can do the same thing on the dividend side for if you're going to look at CD rates or regular savings rates. You can typically find better rates at a credit union. So even in these lower interest rate times, they typically have a better rate for that scenario, because at the end of the day, the banks have to have specific net income profit margins to satisfy their shareholders. So and part of what I'm concerned for the American people, it also is if we continue to have these low interest rate times, you're going to see you're going to hear some news about banks laying off employees because they have to cut expenditures to satisfy their shareholders. So that is something that I do think you'll also hear about. A lot of banks closing branches, whereas, like, for instance, for us, we're opening a branch here in the near future, and part of our strategic goals is to continue to add branches, whereas a lot of banks are closing them. So we're trying to become more attainable for the people, the consumers that live in that area, because studies show that most consumers want to bank at an institution where it's close to their home or close to their work. So even though you see a lot of trends in that, with individual consumers not going into the branches as often, they still want to know that it's there in case they need to. If they wanted to come in for a loan, or if they had questions on their account, they want to have that easy accessibility. So, in my opinion, branches are still very important.
Okay. And so you're saying that credit unions, because they're focused on the people, and because they're effectively owned by the members, right? The customers are the members, and the customers are the owners of the credit union. Then that's the reason why they're able to offer better rates for savers as well as better rates for borrowers, right? So in your opinion, then for the banks, the difference between the credit union and the banks, there's a spread there.
Yep.
Where's that money going for the banks? Is it going to the shareholders?
Shareholders, essentially shareholders and back into the bank. One thing I would also add to that is again, to satisfy the shareholders, banks are a bit more risky in terms of what they loan, what they invest. If you recall back in the recession, you had the Bank of America, the Citigroups, like you had a lot of these large banks.
This is the recession of 2008.
Sorry, yep, the recession of 2008. You had these big banks that had to be bailed out. You didn't really hear those stories about the credit unions because they're less risky on what they lend or what they invest in because at the end of the day they're protecting. They want to protect the money of their individual members, so they're not as risky in terms of that situation.
So what you're saying is that the credit unions are not gambling the deposits of the members. But in 2008, because we saw after Glass-Steagall was repealed in '99, you saw investment banks and regular savings and loans merge into one, right?
Yeah.
And so now these banks, they were leveraging up derivative bets. And that's isn't that what brought down?
Yeah, and one of my favorite movies to watch in regards to that is The Big Short,
Yes.
and that happened. There people were there were banks and there were institutions that were essentially just giving out mortgages to anyone, and so and we all saw what happened there. So it was very challenging times during then, especially for the institutions that put more risk on their balance sheet.
And so for those companies, those banks, right, because the Federal Reserve stepped in to bail out the banks, right?
Yep.
And the money to bail out those banks, you know who paid for that?
You and I.
Yeah, the taxpayers. We paid for it, right?
Mm-hmm.
Now, tell me in the audience why credit unions. Why didn't credit unions go under when banks were going under?
Because again, they typically invest and loan in less risky situations. So you didn't hear a lot of stories about the about credit unions having these mortgages out for properties that were nowhere near the value of what they were.
So credit unions, correct me if I'm wrong, but credit unions tend to own some of the loans, their percentage of the loans they originate. Is that right?
They typically, and quite honestly, the typical things that an average consumer, they can do any type of their banking at a credit union that they can at a bank. So
you can do exactly the same thing at a credit union.
And so credit unions started as like a cooperative in which for instance, a lot of them were employer say groups. So like if you worked at General Motors, there was a credit union for General Motors, and so that's how they started. And so, but a lot of people still, that if they've even heard of there's a lot of people first off that haven't even heard of what a credit union is, but they also believe that they have to be part of a club or part of a like an employment group. But most credit unions have become what's called community charter, basically meaning if you live, as long as you live, work, like for instance, we're a entire state of Michigan chartered credit union. So as long as you live, work in the state of Michigan, you can become a member. And but in terms of deposits, loans, all, and even if you wanted to get more information about managing fixed income investments and such, credit unions have all that that banks have as well. So we do have all those types of services.
So in theory, because credit unions and banks offer the same products and services to the American people, in theory, we could switch from a Federal Reserve Bank to a credit union of the United States.
Yes, and I believe that would focus more on the individual consumer versus the federal government.
Okay. Tell us why.
Well, again, if it's focused on a credit union, you're focusing on the average American. I think, my opinion, the Federal Reserve is, dictated by the government on what to do. So they're not really out for the individual American.
Well, in theory, right?
Yes. Mm-hmm.
But do we know who
But
owns?
we don't. But again, we don't know anything. I couldn't tell you what the size of their their balance sheet is, or what they quote earn as income, because none of that is available to public. They're also not, as far as I know, they're not audited either. So they can pretty much do whatever they want.
Well, the Federal Reserve does publish a supposed third-party independent audit. And they put it on their website. But on that same page where they show that they have a third-party independent audit, they also show that they're not owned by anyone, right? But if you go to the Federal Reserve Act, which is also on their website, and you click on, I think it was Section 2, and you look at there are 3 sections there about stock allotted to banks, stock allotted for the American people, and then stock allotted for the United States government. And it shows there that that the banks had enough money to buy all the capital stock, and that there was no capital stock, there was no stock left over for purchase by the American people or by the United States government. So if you heard a company that has stock owned by somebody, then doesn't that mean it's owned by somebody?
Yeah, that would mean it. Yeah.
So what is it? So if the Federal Reserve Act on their own website says that the national banks own the stock in the Federal Reserve, why in the world would the Federal Reserve website on the About the Fed page say that it's not owned by anyone?
Well, I don't have that answer.
I don't either. Right? That's a really good question, though, right?
Yeah.
We the people deserve to know that answer, right? So these are the types of questions that are out there that just don't have answers to, and we the people deserve to know those answers. That's my dog in the background. Her name is Happy. Do you want to say hello, Happy? Here's Happy. Here she is. And so that's part of the problem, right? The lack of transparency.
Yes.
So, okay. All right. So it is possible. We've established that credit unions and banks are effectively very, very similar. Credit unions tend to offer better rates for borrowers and investors, and relative to banks. Credit unions tend to be more conservative because credit unions own the loans that they issue, at least in part.
But at the same time, at the end, they're more risk adverse because of who they report their. Yes, credit unions do earn, have a net income, but they make their decisions more on what's best for the individual member of the credit union. So
and the
they're
community
not.
that they're
Yes.
serving.
So they're not. We're not. For instance, we're not. We primarily invest in government guaranteed mortgage backs, whereas banks have more leverage as to what they invest in, but it also has a lot more risk. It's not guaranteed. So when you have, like for instance, the economic recessions, that's where the losses can really add up, and they can, not have the capital to withstand those losses. And
For the banks especially.
Yeah.
Okay, so credit unions are more conservative.
Yep.
They own the loans, and they know that they're held accountable to their communities, so they take less risks.
Yep.
And because they have to own part of the loan, whereas the banks tend to sell the loans off, they securitize them in mortgage-backed securities,
Yep.
sell them on the open market, and generally banks don't have any requirement to hold on to a loan after they issue it.
No.
Right. Okay. So in that scenario, all right, so we've established that it is possible to switch from a bank to a credit union. Now, you mentioned earlier the low interest rate environment, right?
Mm-hmm.
Is the Federal Reserve responsible in any way for the low interest rate environment?
Yes, absolutely. They
How?
so one of the specifically, like for instance, one of the areas that the Federal Reserve has built up their balance sheet is that they've been buying mortgage-backed securities, as you had mentioned, pools of loans into mortgage-backed securities.
So mortgage-backed securities are mortgages on homes and properties
Yep.
that are turned into a stock or a security,
Yep. Mm-hmm.
so that they can be sold to investors.
So then what happens is as the Federal Reserve has been purchasing more and more of these mortgage-backed securities, what happens is the rates that I can, for instance, with the credit union can go in and buy these, they're much lower because there's now more demand versus what's out there.
So would it be a correct statement to say that the Federal Reserve, being the big pot at the poker table, is going in and buying a large chunk of these mortgages before anyone else gets to them, and then the banks and the credit unions have to compete over a smaller pool of available?
Yeah,
that's
and
what's
so
happening?
it's driving down the interest rates.
So more money is competing for a smaller pool,
Yeah,
and
so
that's driving down the
so the
return.
premiums that we have to pay on these mortgage-backed securities are much higher, which in turn the yields on these investments are much lower.
And these yields then are driving down your profit margin
Yep.
as a result
Yep.
of that. Now, from a retiree, do you have many retirees at your? Okay. And do you have financial advisors at the credit
Yep.
union?
Mm-hmm.
All right. So do your financial advisors talk about? Can you share with the public what is the impact to the average retiree who worked all their life for a nest egg so that they can live off of the interest?
Well, that's the dilemma. That's the problem now, is because with this move to low interest rate environment, for instance, prior to the pandemic, we and other credit unions had CDs that were yielding 3+%, which is more attractive than where now it's pretty much been cut to a third or a half or a third. So the retirees that want to live off the have their money that they've saved up and want to live essentially off the income earned on those investments, the income now is much less for them because of this low rate environment. So it's very difficult for them, and with right now, for instance, with the stock market being very uneasy and such too, a lot of retirees want to have their money in very conservative type investments if it's guaranteed, as in like a CD. So they can't earn much. So it's very difficult for them. And quite honestly, I believe that it's requiring more retirees to work longer.
Yeah,
So
right. So as a financial advisor, which is my primary background, is where I got started right out of school. What Dan's describing is that back in the late 90s, early 2000s, we would tell our clients that, let's say your target was to make $1 million and keep them in savings, right?
Mm-hmm.
And at that time, 6% was a pretty good planning factor, right?
Yeah.
So 6% on $1 million is about $60,000 a year. And today, with interest rates at 1% or less, that means that the average person with $1 million in the bank earning $60,000 is now earning only $10,000 on their savings.
Yeah.
So in order to have the same income of $60,000, they need 6 times the savings,
Yeah.
right?
Mm-hmm.
So instead of $1 million, you now need $6 million. Now, how quickly did that interest rate drop? I mean, this was quick, right?
I mean, as soon as the stock market crashed, the rates all crashed along with it.
So the interest rates move a lot faster than
well,
people have the ability
if you
to...
recall, right when the pandemic really hit in mid-March, Federal Reserve held a special meeting and they dropped the Fed funds rate to 0 right then and there.
Right.
So it went. I mean, that was a huge drop off. So
And that
and that hurt everyone. I mean, we had to immediately lower our CD rates. Also to be competitive on the lending side, you have to lower. Everyone had to lower their interest rates on loans as well. But for the savers too, it was very difficult time. So
Now, as a credit union, do you actually earn any revenue from the Federal Reserve?
no,
Okay.
no.
Would it be nice if you could?
Yeah.
Okay.
Well, it's interesting because a lot of institutions have to utilize the Federal Reserve for settlement of what like an ACH transaction is essentially like if you set up like your bill payment, basically it's called automated clearinghouse, or ACH, and what it is essentially it's you set up a transaction to come directly out of your account. Well, the Federal Reserve requires funds on deposit for institutions that utilize them, but take a wild guess at what that those funds on deposit what they earn. Zero.
Zero.
Yep. So,
Wow.
Yep.
Wow. So there's no really incentive to work to do.
No. So yeah. So we get our files. Well, for instance, for us, we get our files from them, and we use our what's called a corporate credit union, which is the credit union that's kind of like they work with all the credit unions along the state, and they are like our intermediary for ACH, as well as for the members that come in and, for instance, deposit checks. They're a check clearing. So they do a lot of types of services to assist us with our settlements and such. So, but we earn a dividend with them. So
A lot of that can be automated on the blockchain in theory. We're not going to get into that just yet, but it can be, right?
Yeah, I mean, yeah, essentially, yeah.
Okay, all right. Now let's talk a little bit more about the interest rate problem.
Mm-hmm.
So typically this is an issue of supply and demand, as you were just saying, right?
Mm-hmm.
Now we've been friends for a while, and so you're familiar with my business, Earth Loans,
Mm-hmm.
right? So for the people at home, Earth Loans is a company that creates loans and investments for a healthy planet. And the market that we were focusing on first was geothermal heating and cooling, right? So this house and buildings around the country, even around the world, could replace oil and gas in the house with geothermal heating and cooling.
Mm-hmm.
And there would be loans for each one of these individual houses that were converted, right? So if that meant that this is like a, I don't know, $500 billion to $1 trillion market, what would that do for interest rates? Would that would that not be more loans for credit unions and banks to invest in that could potentially raise rates?
I mean, you'd see a lot of institutions that would be interested in, especially right now, because it's it's a very competitive during this pandemic, because there are less, people are very tight on their money right now because of the uncertainty. So there are less loans out there available. There would be a lot of competition for that. So.
Okay, so that would be something that if you guys could, if you had the capital and if you knew that it was, if it was safe, then you might be inclined to make those loans and encourage people to take it out. Okay, let's talk about the challenges. And I bring that up because the Federal Reserve is not supporting the transition to a planet-friendly future.
No.
As the founder of Earth Loans, I had people trying to get me to take black market money, and instead of the help I thought that I was going to get from investors, for a planet-friendly project, I ended up running into interference instead. And so now again, we don't know who the Fed is. We can't say it was the Fed's fault, but we can say that if we had a credit union that was owned by the American people, and 8 out of 10 Americans want more environmental investments, it's probably a good chance that we would support and say this is a good thing to invest in, right?
Mm-hmm. Yeah, and I think you're seeing a lot more focus on the environmental friendly. I mean, just for instance, in the news, you just heard the other day that California is going all EV cars by I think like 2025, I believe, or something like that.
Close, 5 years.
It was either 2025 or 2030.
Wow.
But they're instituting that in place. So I think you're going to see more and more of that, and that's why you hear about like the Teslas and such right now, because that market, for instance, is a huge market for long term. You hear about the solar heating is a big area that you hear a lot of talk about right now too, for homes and such. So there's a lot of focus on that. So
Excellent. Okay, so let's talk about what are some of the challenges in your mind of switching from a Federal Reserve bank to a credit union of the United States?
Being able to show the American public that this is the right thing. For instance, right now, in the current stock market, for instance, there's a lot of speculation that the Federal Reserve is maintaining the stock market, quote, bubble. And so
how are they doing that?
By essentially buying up all types of assets that they can, and essentially continuing to print debt that we're in debt to. So
they're putting more money into the market to keep it afloat.
Yep.
Yeah. Okay.
So that would be a challenge, just being able to prove to the American public that we would have, that you would have full transparency, and be able to show that this is the best economic value for the individual consumer. So just laying that type of stuff out.
So if that were fully transparent and readily available for everybody, would that allay a lot of fears, you think?
Yeah, and I think, like you mentioned originally, if you were saying everyone could get $4,000, I think that would ease a lot of fears for a lot of people too.
Sure, absolutely. Now you pay your credit union. You said specifically yours does not pay a div. You pay interest, but you don't pay a member dividend, right?
Yeah, but there are a lot of institutions that do. Typically, ones that are maybe that are a bit larger than us.
Okay.
Like for instance, someone like a Navy Federal Credit Union. They're like one of the largest in the country. They may do that. I know that some other credit unions, even locally, that do an annual dividend, and it's obviously it's a nice perk to have as the individual member, because a lot of time you don't realize, all of a sudden you look and you have this extra money in your account. So a lot of them, they'll attribute to like how much you use the credit union. So like if you have loans and such, you may get more of a dividend than someone that just has like a regular savings account. So there's different attributes utilized for it, but it's a nice perk to have. So
okay, all right. So in theory, understanding what we know about, or what we think we know about the Federal Reserve debt being trillions of dollars, or what we owe to the Fed being trillions in nature, somewhere between $8 and $24 trillion. Is it feasible that we could pay out $4,000 per person per year?
Yeah, I mean, because you think about it too, you wouldn't have all the operating expenses. Like you're not gonna have Federal Reserve branches around that you have to pay overhead. Pay for tellers or loan officers or anything like that. Like you don't have a lot of that overhead that like an institution like ours does. So there's definitely the ability from that aspect in terms of those expenditures you wouldn't have.
So if they're making a profit, and I estimate that they're making it probably $1 trillion a year, and you think that that's probably a conservative estimate?
It could. I mean, yeah. Again, if they have $7+ trillion, $7-8 trillion balance sheet, I mean that could be very well.
So if they were earning $1 trillion a year, and we divide that by 330 million Americans, that's how they came up with a $4,000 per person figure. So now, just so we can share with everyone at home too, $4,000 per person per year from birth to age 65 at just 4% is $1 million.
Well,
so that means everyone in America could be a millionaire.
Oh, that would be nice.
Right? That's also how much money the Federal Reserve is keeping from us for themselves.
Well, yeah, like I said, if you go to, I believe it's usdebtclock.org, you can see you can just see at any point in time the tally of what our federal government deficit is, and what it is per taxpayer, and what it is per consumer, every American too.
I think it shows the debt and the deficit.
Yeah.
Right?
Yeah.
Okay. So All right. So we mentioned the deficit, and so the deficit right now, not including coronavirus debt, because that was an additional 2.3 trillion that we weren't expecting, right? Before that even happened, we were bringing in, I think it was about 3 trillion in projected revenues and about 4.5 in projected spending. So we're running about $1.5 trillion deficit. So you know, if we had a credit union, do you think that that could potentially help with this situation? How do you?
Well, I mean, my personal opinion, I think the government spends a lot more than is needed. So I do think if you were to actually, go in and analyze, there are cost saving areas that could be done.
Transparency would help.
So that would be one. But what's what's concerning to me is you mentioned about even pre-coronavirus that we've had a budget deficit pretty much every year, and so even if you take the pandemic out, we've had deficits year after year, so that number was going to increase year after year as it is anyways. The coronavirus has played a pretty large part, but even if you take that out, we're still already 24 trillion, had a 24 trillion deficit, and it would have even been higher this year when it was all said and done. So I do think that government budgets and such, they need to be transparent, because if you're spending more than you're making, if not, pretty much any corporation would have to make changes, so I don't see why in the government that isn't the case.
Should be.
Yeah.
So here's something that's interesting that I'm not so sure, might be a surprise to you. It'd probably be surprising to most of the people at home. The U.S. government has as you keep on pointing out, $27 trillion debt. We're running about $1.5 trillion deficit every year, which means we're adding to that debt, right? Now, did you know that Europe is also in debt?
Yeah, but not, they're not as not as extreme as us.
Not as bad, but if you look at all the major nations, Europe, Canada, Russia, the nations within the European bloc, pretty much everyone in South America, all these countries are in debt. Now, as an auditor, wouldn't you wonder who they're in debt to?
Yeah.
So if all the countries around the world are in debt and no one is the creditor or the lender, who do we owe the money to?
Yeah. And take it a step further, as an auditor, if you're looking at analyzing the financials, and you see consistent year after year losses, essentially, because you're spending more than you're earning, in a normal corporation, that could be what's called a going concern, basically meaning you have concern about them being able to ongoing be able to survive.
Potential bankruptcy.
Yeah.
Right.
So, but in the federal government, that isn't a factor.
I just think that's really interesting that all the major nations of the world are all in debt. When somebody should, if we owe 27 trillion, you would think that Japan would have a $14 trillion balance sheet, right? But they don't. We have to owe the money to someone, but the thing is, we don't owe it to any other country because these countries don't have a big pile of money, right? So we owe it clearly. The entire world is dealing with central banking. It's not the Federal Reserve is for the U.S., but there are central banks set up all over the world, and these central banks around the world are all playing the role of the Federal Reserve, and the countries themselves are all in debt to these central banks, and none of the people, it's not just America, but pretty much every country around the world, the people within that country do not have transparency into the central bank, and they don't know who they owe the money to either. Isn't that right? Do you know about that? Or?
And you hear about the stimuluses here, but from the coronavirus, there's been stimuluses passed in, like all the areas that you just mentioned as well too. And again, someone's in debt to that. So
and every time you do stimulus, what happens when you do stimulus? I mean, to the currency, the monetary supply.
It's devalued
Because you're printing money, right?
Yeah.
So you're printing money, and then if the government is borrowing from the Fed, then every time we print money, are we not adding to the debt?
We're adding to the debt, and then the other, the other concerns you have is, things like inflation too.
Right.
So your kind of your expectation is that prices of goods that you normally buy are going to go up, and you're seeing that, for instance, in the housing market is a good example. Prices, for instance, in Metro Detroit, housing prices are higher now than they were pre-recession of 2008.
Really?
Yeah.
Wow.
So
even though we were in the middle of a pandemic and we have higher unemployment now than we have had in a long time.
Yes, and it's kind of scary. So.
And the stock market's kind of at all-time highs, even though the economy's not doing anywhere near as well either, right?
Yeah.
Interesting. Okay, so this is fascinating. Thank you for all of this, for the comments. Let's talk a little bit about some of the opportunities. All right.
Okay.
So let's say we swap out the Federal Reserve Bank, we convert it into the Credit Union of the United States. We get rid of the fact that there's no transparency, and we make it fully transparent. We get rid of the fact that the bank is owned by bankers, and we make it owned by the American people. We get rid of the fact that the bank is investing in supporting oil and gas, and we invest in renewables and organics instead. We get rid of the fact that the bankers are keeping the profit for themselves, and we split the profits with the people instead. If we do these things, then what are some of the opportunities that you think might arise from that?
Well, I mean, for instance, if every person was given, like you mentioned, $4,000, I mean, I think that would be a huge boost to the consumer spending. So
which could boost. You're saying it would boost the
economy? Yeah, boost
so the economy would actually do better.
It would add jobs. It would. There's a lot of things that it can do. So, and you can see right now, even like where we're currently at, we have all this current talks about a second stimulus and such, and there are a lot of Americans out there right now that are really struggling, and and when you mentioned $4,000, that would help out a lot of people. Mm-hmm. There's just so much, not just with the unemployment, then you have other specific issues right now, like for instance, you have remote learning. So now you got other issues where parents have to figure out while they're working or whatnot how to homeschool their child, and so that plays in the parts. Employment issues are having to now spend extra to hire teach a tutor or a babysitter for your child, whereas when you had them go to school, you didn't have to essentially pay if it was through a public school. So there's a lot of things like that are really making it difficult, on top of the fact that our unemployment rate is at it's been at record highs since the pandemic. So there's a lot of challenges out there, but if there is opportunities for us to give more to the average consumer, it would greatly benefit them.
So this is probably, and I agree with everything you're saying. This is probably more appealing to you as an American, what I'm about to bring up, as opposed to specifically with reference to your background as a CFO, right? But if you could buy, let's say, an organic apple versus a pesticide apple, organic apples are more expensive, right?
Yeah.
Why is that?
Because they're cared for more, I guess. They're cleaner. They cost more to care for them.
Okay, so the inputs of producing organic apples are more expensive than the pesticides.
Yeah. Mm-hmm.
So in other words, we've been incentivizing and subsidizing probably because these corporations, they don't pay very much in tax.
Yeah.
Right. I mean, $8 trillion in annual tax or annual corporate profit, and they're paying. It works out to 2%. I think effective tax rate is all they're paying, because they're only paying, I think it's like 8% of the federal budget in terms of total tax revenue. So that's huge. So here we are giving tax credits to corporations that are creating chemicals, and they're supporting a food economy that is poisoning us. What if we instead invested through our credit union? And actually, let me ask you, do you think the American people would choose to support more organics as opposed to pesticide type food?
Yeah, absolutely. I mean, you see more and more Americans eating that route and such. So
And if we could drive down the cost of organic food by making sure that the farms had the available loans that would help them grow and thrive instead of put them out of business, that would drive down the cost and make organic food more available for everybody, right?
Mm-hmm.
Now, from a national standpoint, if everybody's eating organic food, and if we're not using fertilizers and pesticides on the crops, what does that do for the water supply?
Makes it available and healthier,
cleaner, right? Yeah. And if we're converting a oil and gas transportation system to electric and maybe hydrogen or something else, would that clean the air too?
Yeah. Mm-hmm.
Okay, so if we have cleaner air, by the way, this is how I define liberty. I define liberty as clean air, fresh water, healthy organic food, money that retains value over time, and a constitution that applies evenly to all people at all times by default and without exception. The credit union concept right here. Does the credit union create cleaner air if we support pollution-free transportation?
Yeah.
Does it support cleaner air if we help build businesses and buildings, homes as well, get off of oil and gas and onto geothermal or some other pollution-free?
Mm-hmm.
All right. Does the credit union help create cleaner water if we're encouraging the farmers to get off of pesticides and fertilizers?
Yeah.
Okay. Does it produce more organic food at lower cost if we're giving farmers the loans that allow them to grow their product at lower cost?
Yeah, more supply, so would drive down the price. So.
Okay. All right. So Liberty, we've got the first 3 check marks in the box on Liberty: clean air, fresh water, healthy organic food. All right. Constitution applied evenly. If we have better transparency, do you think maybe how would that affect the American people and government? Would that improve or worsen?
I think it would improve the perception of the government for the average American.
Okay.
So.
And if we were to identify problems within, would that allow us to better identify problems?
Yeah, it would be able to more scrutinize government spending too.
That's a really good point. All right. So that's 4 out of the 5. The only 5th one is money that retains value over time. How is that accomplished? Right now, you identified earlier that housing prices are going up, right?
Car prices going up.
Car prices are going up.
Yeah.
Pretty much everything's going up.
Mm-hmm.
And you mentioned that the Federal Reserve is just printing money, right?
Mm-hmm.
What's the best way to have your dollar maintain value into the future?
Not print.
Not print money. Okay. That's pretty good. Not print money. That's a good answer. Okay. So, with the money that's available in the market today, if we just stopped printing money and then backed it by nature, would that be a step towards retaining value?
Yeah.
Okay. So is there any reason why we shouldn't do these things?
No, I mean it's getting get confidence, showing the confidence to the Americans that this all can be done.
Okay, excellent. And that's a matter of having conversations like these,
mm-hmm.
and then putting forth a plan that's transparent for the American people, right?
Yep.
Okay. All right.
I like to see a lot of numbers and such too, obviously.
Yes, because you're an accountant and a CFO.
Yeah.
That makes a lot of sense. Okay. So Liberty, effectively, it's not just clean air, fresh water, healthy organic food, money that retains value, and a constitution that's applied evenly. Liberty effectively is a credit union of the United States that's clean, green, citizen-owned, and fully transparent, right?
Yeah.
Okay, great. Now, who, are any of the major candidates proposing anything like this?
No, not even close. No,
Not just Republican, Democrat, but also Libertarian too, right? And the Green Party.
No, it's not. Yeah, it's not even a primary focus, to be honest.
Right.
It's the primary candidates are spending too much time bashing each other and not really expressing or explaining how they're going to help the everyday American. Specifically, what I want to see is helping out those Americans that are really struggling right now, because there are so many out there, and what we're doing right now isn't helping them.
Right. You're right about that.
It's very saddening, and it's very difficult to focus on because at the end of the day, for instance, what we're going through right now, the stock market, for instance, has elevated back to its near highs. Well, who's the primary people that receive that benefit? It's the top 1-2%. Essentially, people that don't really need all that money. Whereas you have more people that have to go to food banks and such just to survive. You hear about all this, the stories about the number of Americans that can't pay their monthly rent or mortgage, and so it's going to continue to be a real huge issue in this country, and they need support. So, and on top of it, we have it's debatable, but I think we have close to more so a 10% unemployment rate, which is higher than.
Why do you say that?
Just because of there's a lot of people that the participation rate, which basically means a person that's actively looking for a job, has significantly declined. So in that scenario, they're not looked at as being, quote, unemployed.
And this is somebody who's been looking for a job within the last 2 weeks, right?
Yeah.
So if you if you didn't make a job application within the last 2 weeks, you're no longer counted as unemployed?
Yes, if you're not actively looking, yes.
Right. So if a lot of people end up on unemployment because of this, then it's feasible that could be even higher than 10%.
Yeah, and then you take it even a step further. There's huge concerns about a lot of businesses surviving this pandemic. For instance, restaurants is a good example. As we get to colder weather, there's going to, if the pandemic's still at where it's at now, it's going to be, they're going to have more struggle with in terms of, having enough customers to be profitable and such. So and then on top of it, a lot, even with our credit union, we've had to add additional expenditures to accommodate for a safe environment during this pandemic. So there's a lot of added cost for these businesses on top of less income. So having other opportunities than the essentially one stimulus that really just added a bunch of money to our deficit would be beneficial for the average consumer. So
that makes sense. The stimulus, it seems like the economy is almost on life support if we have to put stimulus in all the time. Does that seem what?
Yeah.
Seems like that, right?
Mm-hmm.
Okay. I would like to, that I'm a candidate for president, right?
Mm-hmm.
And I'm on the ballot in Colorado and Utah. There are also, I believe it's either 6 or 9 other states, and I'd have to check, but there are a number of other states, I believe it's 6, that have no requirements at all. They can write me in, Joe McHugh, for president right away. Because, as you just mentioned, there's no other candidate that is talking about ending the Fed and going green instead with the credit union, right? So, and then there are an additional 16 states that with a little bit of, like a couple, for example, Minnesota. If you're in Minnesota watching, please send me an email, because I need just one person in Minnesota to be an elector for the Electoral College. Should we win the state of Minnesota, then and if we get that one person who's willing to vote Joe McHugh in the Electoral College if we win the state, that means we become eligible for being a write-in candidate in Minnesota. So, but we can't be a write-in candidate in Minnesota unless we get that one Minnesotan person to say, sure, I'll vote for you if you win the state. Right? So there are about 16 other states like that. So if it's all right with you, what I'd like to do is present you with a policy idea that fits on top of this, that I believe would help with housing and would help with local job growth, would help with healthcare, a lot of things. Okay? Okay. It's called the Universal Savings Account, a USA.
Oh, yeah. There you go.
Cool, right? All right. So in your USA, what we would do is we would consolidate your 401k, your Roth IRA, traditional IRA, your 529 savings plan. Like, we consolidate all these different savings plans, and we put them all into a single account. We'd also help you be free from your employer-sponsored health care, or you can keep it if you want, but if you want to be free from it, then employers would be encouraged to put money into your account so you can buy your own health care. And if you get fired at some point, then you don't lose your health care because you can take it with you. It's portable, right? So now, if you're at age of, when you're born, you start earning $4,000 a year and earning 4 to 5, 6, 7% on that, because we're investing in planet-friendly loans and investments. By the time you turn, I think it's 18, you would have, is it 18 or 21? Got to run the numbers. But somewhere between 18 and 21 at 5 to 7%, you end up with $120,000 to $150,000 in your account before you even go to work, before you even go to college, right? Now, you continue to get the $4,000 compounded at that rate until you're 40. If it's a 7%, by the time you're 40, you're a millionaire. Now, in this scenario, let's say at age 18, you go to school, or at 21 when you graduate from school, you want to buy a house. I would say, in the USA proposal, you're allowed to take 10% and put 10 or 20% and put that towards a down payment on a home if you want to. Right now, if everyone in America has $120,000 to $150,000 in their savings account by the time they're 18 to 21 years old, what is that going to do for the mortgage industry?
You would have more younger Americans buying homes.
Absolutely.
Because, right now, the issues you have is, you have a lot of younger Americans that are not buying homes until they're older than in prior generations, and it's just getting more and more difficult, because when you talk about, for instance, college, for instance, college tuitions now, whereas when I was in college about 15 years ago, are at least double what they were. The average year is about double what I paid, and it's a lot of money. So you add that student loan debt to the pool of already debt that this new college grad has. There's no, that's why you have a lot of them. They move back home and such, because they can't afford to live on their own, quite frankly.
Okay, so you kind of hit. I'm going to make a note of this, because you said student loans, and that also ties into credit scores as well, right?
Yeah.
But I want to ask one more follow-up question before we pivot to that. So, if more people are buying homes, Does that help the home building industry?
Yes.
Does that help the home renovation industry?
Yes.
Does that help plumbers and carpenters and the skilled trades industry?
Well, that's a whole other subject, because I think that is an example of an area that is there is a demand for more skilled technicians like that. So
Right.
there's a lot of opportunity in that area specifically for for Americans to go into as well. That's
Okay.
that's a whole other topic.
So it's
but
gonna.
yeah.
It's you think that alone could potentially be a significant boost to the economy?
Yeah, and jobs too.
Okay.
And more Americans going to trade school and such.
So the credit union itself puts more money in the hands of people, and therefore that could potentially be good for jobs and the economy. The idea that we're making this money available for home purchases would also boost jobs in the economy, right? In home building. Okay. And then we're also aligning our money with our environmental values. So now all of a sudden we're not getting as sick as before, right? Because we're not drinking bad water, breathing bad air, and eating unhealthy food, right?
Yeah.
So if our healthcare bill is going down, then that means we potentially can pay lower taxes, right?
Yeah.
In fact, 35% of your tax revenue goes to healthcare. Did you know that?
No, I didn't know that
Yeah, it's
specifically.
$1.5 trillion a year we spend on Medicare and Medicaid. So that's $6,000 per person per year. Now, and there's no transparency in healthcare either.
Oh yeah, no, there definitely is not.
If we put $4,000 in your pocket every single year, and by the time you turn 18, you're on your own, and you're still getting that $4,000 check, and if you need to go to the doctor, you can say to the doctor, how much is it for this visit? Right? Today, you can't go. You go to the doctor or the hospital, you ask that. What happens if you ask them, how much is this going to be this visit or whatever?
They don't tell you.
Right. Now, so
They got to bill your insurance company.
Right. And the insurance company, so, who knows? So it's basically the insurance companies, and, we have written a blank check to the healthcare industry. So if we introduce transparency in a marketplace, how does that help competition?
Well, it essentially, they would have to have more price competitive. They'd have to have, if they have transparency, they have to show how much it would cost, and it would require the different insurance companies to essentially drive down their price to be more marketable.
Or even the doctors themselves, right?
Yeah.
If you were to go and buy directly from the doctor instead of through the insurance company, and doctors had to compete that way, would that drive down costs too, you think?
Absolutely.
Okay. So transparency is improved through and through as a result of this, right? So,
Yep.
okay, now, so this is a potential boon. Now, if the $4,000 per year were also you were also able to use that to pay for healthcare expenses up to $4,000, but that $4,000 were also reimbursable by the government because you're helping to drive down cost. Does that make sense?
Yeah.
So now all of a sudden you're forcing transparency into the system at this point. You don't have to spend the full amount. Just so you know, the average healthcare expense per person per year right now is $4,000. Okay, so that $4,000 would cover most Americans on a cash basis, which with transparency would probably drive down costs by like 80-90% potentially.
Yeah, it could. Yeah.
Potentially, and especially if we're not getting sick in the first place, right? Okay, so that would come out of the healthcare savings dividend, and because that would go in the USA account. Now, what I'm proposing is the healthcare plan. I know we're throwing a lot out there, and this is just a conversation, so you have to go to libertystrikesback.com to see some of these articles to see how it all plays out. But what we're doing is we want to apply competition and transparency into the healthcare market to drive down cost there as well. And you would end up getting a dividend, just like with your credit union. You'd almost get like a rebate or a refund, or a dividend based on the savings to the taxpayer as well. Right? So let's say in year one we're spending $1.5 trillion. In year two we spend only $1.2 trillion. We save $300 billion. $300 billion divided by 330 million people, split that in half with the government. They get to keep half, we get to keep half, and all of a sudden everybody's getting a nice bonus for participating in a healthcare savings dividend that's driving down the cost of healthcare for everyone. Okay, all right. So these are kind of some high level, I want to just kind of explain some of the ideas and how that works. It's tough to cover the details in a format like this, but I just
Yeah.
want to present that to you. In general, with increased competition and increased transparency, these sound like good ideas to you? They sound like
Ways to drive down costs, which is what every American wants to see.
So we're driving down costs, which means we'd have lower tax, potentially lower tax revenue. And we're also adding revenue from the credit union at the same time, right?
Mm-hmm.
So we potentially could have the same or more revenue from the credit union than we have in tax revenue.
Yeah.
So in theory, and I know that it's going to take some time, but in theory, is it possible for all the libertarians at home that want to end the Fed and they don't know what to do with it? Is this potentially a path to actually do that and eliminate the IRS as well at some point?
Possibly, yes.
It's possible.
Yeah, I mean, it's possible.
That's what I want to say, is that this is possible. But if you don't replace the Fed with a credit union, do you see any conceivable way whatsoever that you can ever get off of tax revenue?
No, I mean, if things will just continue to be the way they are now.
Because there's no other revenue source for the government,
No,
right?
no.
So this is really the only alternative. Okay. Student loans. Let's talk about student loans for a second.
Mm-hmm.
All right. Now, right now we've got student loans. Some people are paying private sector student loans that are as big as a mortgage.
Yeah.
Right?
Oh yeah, even bigger in some scenarios too.
Do you have people that borrow from your credit union for student loans, or?
We utilize Sally Mae, so we basically we direct them. We used to do some student loans where we kept the student loans, but again, you know, student loans are very they're more risky because of they're unsecured and such when they're privatized. So we can kind of we offer, but we don't retain these specific student loans because we focus on other areas, auto, mortgage, those types of things. Just it's essentially we're more again, when we talk about, we're more conservative, so that's not an area that we specifically focus on right now. So
how do you feel about private companies charging 200% and 300% more than the federal government for student loans?
Yeah, no.
I mean, now granted, you're a CFO, you believe in capitalism, right?
Mm-hmm.
And I do too. As a financial advisor, I believe in capitalism as well. I think that the issue today is not capitalism. The issue today is that it's not properly aligned with the American people, and it's not properly aligned with the planet. And once we get a properly aligned economy and monetary system, then capitalism would work for more people, for all people potentially. All right, so what if we could offer student loans at the government borrowing rate? Do you think that would that help some people? Because
that would, yeah. I mean, that would help. Because again, it's all, a lot of it's focused on my experience. A lot of consumers focus on what's that, can they afford based on what's that monthly payment? Well, if that monthly payment is significantly lower, then it allows them to not only be able to save from that aspect, but then again, they may, it may increase consumer spending in other areas too.
Excellent point. So again, this is another way. If we just allow the federal government, we could wipe out student loans, but that's not necessarily the right way to do it. It depends. But at the very least, we could allow them to refinance at the government borrowing rate and reduce their payments by as much as 75% by cutting student loan interest rates from 7-8% down to 1% potentially.
Mm-hmm. Well, I mean, yeah, if you did that, yeah.
Right. Okay. Credit scores. Covering a lot here, but this is all. I mean, this is great because you're a CFO, you're an auditor, you've got strong accounting background, you understand how this stuff works. So that's why I'm excited to get your feedback on this, and we're going to cover as many of these topics as we can. The three companies: Equifax, TransUnion, Experian.
Yep.
Are they public or private? Are they? Well, we know they're publicly owned, right? They're publicly issued stocks, right? But are they owned by the general public? Meaning, are they nonprofit or are they for-profit?
They're for profit. If they have a stock, then yes.
Okay,
profit.
very well. If they have a stock, then they're a for-profit company. Now, there's nothing necessarily wrong with being for-profit, but if they're controlling the credit scores for everyone in the economy, should we or should we not know how they produce their credit score?
Yeah, I mean they try to specify like the attributes, but no one really you can't really find out specifically why your score dropped as much as it did or went up as much as it did. It doesn't. You don't get any transparency on that.
So
piece.
There's no transparency with 3 credit unions or not credit unions, but credit bureaus. Is that right?
Yeah.
Okay, and your credit score could go up or down, and we don't necessarily know why that is.
Yeah.
There's also no transparency with the Federal Reserve Bank, right?
Mm-hmm.
So now we have a Federal Reserve Bank that is basically controlling all the money in the economy, and we have these 3 credit bureaus that are guarding the gates, would you say, because we don't know how they're calculating our credit scores.
Yeah.
Okay, so now I moved recently to Detroit, and in Detroit, in the area that I moved to, you can buy a house for $1,000. And a lot of these houses that have been rehabbed, you still can pick them up for under $40K. Now, did you know that the difference between, and I'm just going to bring up race for a moment because it has implications. There's relative to wealth and finance.
Mm-hmm.
But did you know that because we are white and male, and if our families are on average 10 times wealthier than our black counterparts? Did you know that?
No, I did not know that.
10 times wealthier.
Wow.
Right. And now we don't actually know why that. I mean, we do know some reasons, right? We know the drug laws, and we know that people, once you get in trouble with the law, you tend to get in trouble with the law more, right? And you can get pulled over, et cetera, and negative compounds on top of negative, right? But you just got finished saying we don't have transparency into the credit bureaus. So is it possible? Now, I'm not saying that they're doing this, but is it possible that they are showing some form of discrimination or some form of preference for one person over another based on where they live? Is it possible?
I mean, it could.
We don't know that.
Yeah.
But it's possible.
Yeah, I mean.
If that's a possibility in 2020 in America today, is that acceptable?
No.
Does that fit under a constitution applied evenly to all people at all times, by default and without exception?
No.
Is that liberty?
No.
No. No. Can you handle the truth? I think he can handle the truth. Right?
Yeah.
American people, can you handle the truth? I think you can handle the truth. We can handle the truth. The Federal Reserve doesn't think that we can handle the truth. We need to change that, right?
Yeah. We need more transparency.
We need more transparency. All right, last segment. And you tell me a little bit about your knowledge and experience in cryptocurrency.
I mean, I know about like trading it and such, but like for me, like I don't know all the specifics on like the whole blockchain and such. So like I have some familiarity, but not a lot.
Okay, so have you bought cryptocurrency?
Yes, yeah.
What currencies have you bought?
Yeah, I bought through Coinbase and Binance in the past. I bought, Bitcoin, Ethereum, those types of cryptocurrencies. So.
Any other particular one?
Oh, Tron, my buddy Tron.
He loves his Tron.
Justin's son. Hope you're watching.
All right, Justin's son, if you're watching, hey, listen, we'd love your help with the blockchain. All right, what does the blockchain itself, is that a settlement mechanism?
I assume so, yes.
Right. I mean, you can pay for stuff on the blockchain, right,
Mm-hmm.
with Bitcoin.
Yeah, I think one of the most difficulties with cryptocurrency is getting it to be widely available to the not just American public but overall worldwide, and people don't get confused with it.
Okay.
That's that I think is one of the biggest difficulties for instance, even just like transferring from one from like a Binance to a Coinbase to withdraw money or whatnot. I mean, there's a lot of steps that can make it challenging, and I think that can be a barrier to open acceptance of it. So,
what if the federal government were to get behind blockchain, right? I mean, would it make it easier? So, for example, you have bank accounts or credit union checking and savings accounts, right? Mm-hmm. Now, when someone spends money in their checking or savings with their credit or their debit card, who processes those transactions?
Visa, MasterCard.
And they're tied to the banks as well, right? And ultimately, the Federal Reserve and the Treasury are settling and are working on these, right? And then there's something called the Bank of International Settlements at the international level, which is settling the movement of money across borders and that sort of thing. Okay. So settlement is kind of a form of my dog wants attention. Settlement is a form of settling a transaction, right?
Yeah.
And that's something that right now the Federal Reserve does in coordination with all the central banks around the world. And if you look at, and maybe we'll bring this up and put an overlay up that shows the services that the Federal Reserve offers to the American economy. Mm-hmm. Almost every single one of them can be addressed or is addressed by blockchain, which means that we can automate the vast majority of these banking services through blockchain. Now, I would argue that the Federal Reserve and the Treasury Department are already working on implementing blockchain. Some people, have you heard about that? Like some people, governments are talking about creating crypto and...
Yeah, but I hear that they are trying to, from what I understand, there's a lot of people in government that are trying to block because of its ability on the cryptocurrency, the ability to to devalue the dollar. As the dominant form of currency across the the world. So you hear stories about that. You can Google it. About how a lot of the.
Well, why would the crypto devalue the dollar?
Well, because if you're if people are using other forms like Bitcoin, for instance, they're veering away from the dollar. So
does it have anything to do with the supposed fixed supply of currencies out there? Bitcoin supposedly has 21 million fixed, and relative to
the dollar that has infinite. That very well could be part of it, but I think that they're really trying hard to regulate to add regulations to cryptocurrencies.
Did you know that in the state of Ohio, you can pay your taxes with crypto?
Yeah, I did hear about that.
Okay. So some areas are already moving towards adoption of this stuff. Mm-hmm. New York State's got a number of laws in place to allow cryptocurrencies to register as currencies and securities and that sort of thing. Just throwing that out there because from what it seems like crypto might be the future, and from the average person at home, it's just a digit on a computer screen, right?
Yeah.
So really, from that standpoint, is it any different than just looking at your checking account?
No, but I think part of concerns maybe from the average American is security on it, like his if they lost it, like if so, like
like the key to access.
Yes, exactly. So then, like if that happened, when how would you get access to your money and such? Right. Whereas if you lost your ID, for instance, you could still have other ways of getting access to your money or whatnot, or debit card or whatnot. So at a bank account. So those are some of the difficulties. I think that cryptocurrencies, blockchain, they have in that gaining that American confidence in them. So
it's a user user familiarity,
Yeah.
security, feeling
Comfort,
good, that comfort
yeah.
level.
Mhm.
But that's something that can be addressed, right?
Yeah, I mean it could be, but I think that's one of the current roadblocks you have.
Okay, fair enough. Interesting. Now, what do you think about the idea of backing the U.S. dollar by nature, for example? I mean, if you want to have a currency, right now we have a dollar that has no cap whatsoever,
Mm-hmm.
right? So that means you can just inflate it away. Prices are going to go up, and really, Bitcoin is not causing the U.S. dollar to go down in value.
No.
The Federal Reserve is by
Yeah.
printing more money, right?
Mm-hmm.
So if we were to just cap the amount of dollars in circulation and put it on a blockchain, then we would know that you can't create more dollars, right?
Mm-hmm.
So that right there should be a boost to the value of the dollar in theory.
Oh yeah, it would significantly boost it. Yeah.
Okay. So if we were just to cap the dollars that are out there today, back it by something like nature, or even, it doesn't even have to be backed in theory, if you just cap it, it can boost it. It can
Absolutely.
boost the value. Now, if we were to back it by nature, land and water assets, and create a mechanism that ties the economy and the money and the interest paid on that money to planet-friendly products and services and moving the economy towards being aligned with the planet. Do you know of any other crypto out there that does that right now?
No, not that I'm aware of.
What do you think that, because 80% of the American people want more planet-friendly products and services, do you think that might be popular?
Possibly,
Right?
possibly. That's
So
a fair
it all
word.
depends on whether or not they're interested. They're
Yeah,
comfortable
I mean,
with it.
yeah. That again, you got some of the other roadblocks and such that you'd have to address and along the way. And like you said, if you can get the familiarity, it could be potentially down the road, but I think it will take a decent amount of work to get there.
Sure. If we got all the banks in the room and all the credit unions in a room,
You won't get that.
well, all right, fair enough. But
but
in theory,
hypothetically,
if we
yeah.
replace the Federal Reserve with a credit union, right, then we would be able to coordinate those through the same mechanisms that they're coordinating right now, right? And so in that scenario, if the United States government got behind offering a dollar that's not a Federal Reserve note, but a dollar that's a United States dollar,
Mm-hmm.
then wouldn't credit unions and banks simply just be able to add a checking and savings for everybody that you serve, denominated in that new U.S. dollar?
I mean, yeah, you could, yeah, you could. I mean,
And then
as long as that's the yeah. I mean,
if it's
you would
backed
just-
by the full faith and credit of the U.S. government, right?
yeah, yeah. I mean, it could, yeah.
Then you could just create new accounts.
It would just, instead of being a U.S. dollar, it'd be a U.S. environment-friendly dollar or whatever.
Well, right. It's not a Federal Reserve note, but it would be a U.S. dollar, nature-backed dollar. whatever
Yeah,
you want to call it.
yeah.
Okay. So, and that would be pretty easy to do, right? You just create new accounts for people, right?
Yeah.
Okay. Interesting. All right. And then if it's in the bank and the credit union, can you tell us about what kind of security measures you have in place for your existing accounts?
So in terms, like we have to have, like, for instance, the highest level of IT securities and such, because with everything, with so much going digital nowadays, we also have specific checks and balances for, like, for instance, if someone wanted to wire out money, to ensure that it's that person and such. So we have, and also on top of that, both at banks and at credit unions, your money is guaranteed, federally guaranteed up to $250,000. So, so there is, the backing of guaranteed by the U.S. government. So, you can have that rest assured that, sleep at night type, that your money's in safe hands. So,
Would it be possible to apply that same level of bank security to another checking and savings account denominated in a different currency?
yeah, I mean, it's possible, yeah.
Is there any challenge associated with that? I mean, you're already covering one type of checking and savings. How many different types of checking and savings do you have?
We we have like basic checking. We have a checking account that's tied with like identity theft protection and such like that. But overall, we have team checkings, we have business account checkings. So we have various types, but they kind of all do the same thing. You typically that's where most of your transaction volume goes through. If it's either writing checks or using your debit card or whatever the case may be. So it is. I mean, you just it's basically determining what's how to determine like the value of it and such, and then transitioning balances from one to another. I mean, you could do that. I mean, it's essentially like if you went to Europe, and had to change the dollar there. It's kind of like the same thing, exchanging currency and such. So
and that could
our
be
Mexico peso or whatever, yeah.
And that could be as simple as moving from one account to another.
Yeah. So.
Okay.
Yeah.
All right. So pretty easy to do, right? So.
I don't know if it's pretty easy, but it can be done.
Well, you would tell your tech guy to get it done, right?
Yeah.
Okay. All right. Anything else that you want to talk about? Any other questions, comments?
I think we went over a lot.
We did
more than I thought we were going to.
We covered quite a bit. Well, you know quite a bit about the finances, so I thought, and you brought up a lot of good ideas. So I'm glad. Thank you very much for spending time with me. Dan Mariano, give him a hand at home. Again, we're going to put up some more details on these specific policies at libertystrikesback.com. If you are in Utah or Colorado, remember to check the box for Joe McHugh. If you live in Michigan or in 25 other states, pretty much half the country, I'm going to put it up on my Twitter feed, which is Vote Joe McHugh. You can see which state, and if you want a clean, green America that's healthy, wealthy, and free, then remember to write in Joe McHugh for President of the United States. Go to libertystrikesback.com for more information. Thanks again. And you guys have a great night. Thanks.
All right.